27, we had 2 children, bought our first house. We were doing everything we thought we were supposed to do. We had a financial planner, but it was in 2001. Rich came out with his book called Extreme Success. On that book tour, he noticed a freckle. Turned out to be melanoma. The doctor did more tests, thought it had spread, and told him he probably had 6 months to live. We had bought this big house, and I had rented out every room in the house that we didn't absolutely need. And that's when I kind of got hooked to the idea of rental income to get you through those difficult times. My first client was a multimillionaire that was trying to refinance. He just brings a briefcase and puts all of his financials in front of me and starts asking me for advice. And that's when I realized even wealthy people, even successful people, don't really know what to do with their money.
Hello, amazing entrepreneurs, fortunes of the brave, brave souls. Welcome back to the conversation. Mary Katherine Johnson here, CXO of Planet Wealth. Thank you for joining me and my incredible guest. Today I have Kathy Fettke with me, who is a leading voice in real estate investing. Kathy, welcome to the conversation. How you doing?
I'm doing great. Thanks for having me here.
Yes, I cannot wait to dive in. I know we're going to have a lot to talk about, so I'm just going to get right to it. Just for people who don't know who you are and what you do, just kind of give us a little introduction and take us through what it is you do.
Yes, I am the co-founder of Real Wealth. We help people build real estate portfolios for the long term for their retirement plan to get to a point where you own, let's say, 10 properties free and clear that helps you have a wonderful retirement. And we also syndicate, so we have funds for people who just don't have time. We help busy professionals invest in real estate. So that's what we do.
Fantastic. Well, I think we're going to have definitely a lot to talk about based on what Planet Wealth has to offer right now. We're swimming in the same or very similar waters. So I know this is going to be an incredible journey. So now I know you have a lot of things that you've done. You're a best-selling author. You have a podcast. You have this business where you help people understand how they can add to their retirement options using real estate. It sounds like you have many different ways you do that. But take me back. That's not where you started, I'm sure. How did you get into this whole game?
Well, I married my dream man. He literally proposed to me in a prince suit, prince costume on a horse.
Oh my gosh. Yeah. Okay, we're going to have to talk about that offline. But anyway, keep going.
Yeah, and we had 2 children, bought our first house. We were doing everything we thought we were supposed to do. We had a financial planner telling us to invest 10%, to save 10%, have 10% set aside for emergencies, just, these different buckets. We were really on the right track if you look at traditional investing. But when it was in 2001, Rich came out with his book called Extreme Success. He was a world-renowned business and personal coach and came out with a book called Extreme Success. And on that book tour, he noticed a freckle, which is funny. He's a redhead, but lots of freckles. But he noticed this one, ended up going to check it out. Turned out to be melanoma. The doctor did more tests, thought it had spread, and told him he probably had 6 months to live. So that, talk about sort of being on the top of the world and then boom, just falling, free fall, not knowing, like, how is this possible? Healthy, strong man. Turns out the doctor was wrong, and Rich is with us here today. But, anyone who's gone through a health issue or through cancer knows the cost of that. So we blew through all the things we'd done right. We blew through our investments, our savings. It was a very difficult time. And we had bought this big house, it was like a 6-bedroom house. We did a typical thing that most Americans do and overspend. But in this case, it was a good thing because my immediate reaction was, I think he even went away for the weekend with his friends, came back, and I had rented out every room in the house that we didn't absolutely need. Turned the au pair unit into a rental, the office into a rental. There was a separate entrance there. And, I was able to take 6 students in who paid $600 a month. So it just helped us get through that very difficult time. And that's when I kind of got hooked to the idea of rental income to get you through those difficult times when you can't work, when you and it may happen to all of us at some point. When you can't trade your time for dollars, what is going to be bringing in the income you need?
Wow, what a story. And a story that has a happy ending. Not
Yes.
difficult journey, but happy ending. That's so incredible. So because it's so true. I have a similar situation. My father-in-law has Alzheimer's, and we are his caregivers, and we're trying to find ways to be able to supplement his Social Security so that we can help him stay in his home for as long as possible. And same situation with rental income. Very, very lucrative, or lucrative in the sense that it has an opportunity to bring extra income to the family for whatever it is you're looking to supplement or augment. So then, how did that then? You said you got the bug. What did you do next?
Out of desperation, I had been a stay-at-home mom. That was my dream. Our kids were little, and I got out of my career, which was broadcasting. But I still had this radio show on the weekends in San Francisco, and I just pivoted that from news, kind of like daily news talk, to how do you make money? Like, how do you do this? My father was a dentist. I had a wonderful middle class life, but there were 5 kids, and we lived in outside of San Francisco. So even a dentist's salary doesn't go very far there. So he never really quite knew how to invest, and the only thing that ever made money was the house that he bought that went up in tremendous value in the San Francisco Bay Area. That's how my mom was able to live her healthy life, was through this house. So I could see sort of the power of real estate, but I didn't know how to do it or how to invest in it. I just didn't understand it. So I turned the show into that quest and just started interviewing people. And because it was on a major San Francisco station, I was able to get people like Robert Kiyosaki, the author of Rich Dad Poor Dad, and people with more knowledge than me to come on and tell me their secrets. This is before podcasts. So it was very difficult to get that information. Today, you can start a podcast and interview people and learn from them. But back then, where'd you learn it? You could read books. You could go to these real estate groups where, it turns out they were just trying to sell you stuff, back of the room, say all that, all that. So I felt like I was one of the first to be able to open up the secrets of the wealthy to the masses. And my show just took off. It just took off. I was able to get sponsors because of that. And one of my sponsors was a mortgage broker. He paid a lot of money, so I wanted to do a great job for him. So I ended up interviewing his clients to find out what they were doing with their mortgages. And it turns out they were doing all kinds of things, buying old homes, fixing that up, selling for a big profit, buying a primary residence, living in it for 2 years, fixing it up, selling it tax-free after 2 years. Just learning this whole world that nobody had taught me. And because of that, the show took the phone started ringing off the hook of people who wanted mortgages so that they could also buy and hold rental, or all these different things you could do with the asset class. And my sponsor said, this is too successful. I can't keep up with all the business. Would you consider getting your real estate license and being a mortgage broker? So that's kind of what I did. I ended up getting into real estate that way as a lender.
Oh my gosh. I mean, that is, again, incredible. And that's usually kind of the way life works, right? We follow a curiosity, and that curiosity then turns into a vocation, right? It turns into a job we make for ourselves.
Yeah, listen, business is just too hard to not have fire, to not have passion and have it be something you just want to be obsessed over, right?
Yeah. I don't know how you can. I could not. My husband was a tax accountant, and most of his clients living in California. So I'm probably close to where you are, Northern California, about 60 miles north of San Francisco. But he would have clients who were, workers, people who were employed by the state, and they went to work and just sat in a desk and pushed paper and did the things they needed to do every day and hated it. I could not imagine that. I just can't imagine not having some kind of a passion for what I'm doing. I can't do it if I don't.
Yeah, I can't do it either.
Yeah.
It's 8 hours of your day, so better be something you love.
Out of your life that you can't spend anywhere else. So yeah, I get it. So you turned that incredible show that allowed you to follow a curiosity into uh, an actual position, and not just a position, but an opportunity for a lifetime of continued curiosity because this world changes all the time.
Yes.
It's
And you
not.
never know where it's gonna lead you because then my first client was a multimillionaire that was trying to refinance and wanted to, like, wanted to maybe pay off some debt or buy more property but this my first client, and I didn't know anything about real estate. He comes in, and I don't know if it was because 'cause I'm female and he felt more safe with me. I don't know, but he just brings a briefcase and puts all of his financials in front of me and starts asking me for advice. And I'm like, "Uh, let me bring my, the sponsor guy, like, let me bring my boss in to answer these questions because I have no idea." I didn't say that, but I very coyly said, "Let me get someone else in here." And that's when I realized even wealthy people, even successful people don't really know what to do with their money because they're busy doing the thing that makes them money, right? So it was a big eye opener. And for many people, many clients after that, I realized they were coming to me as their mortgage broker, but more of a financial planner. And that responsibility felt enormous. And I also quickly would look at their stuff and be like, well, this doesn't make sense. Why do you own this property in San Ramon or, Marin or, that's negative? This is negative. This is negative cash flow. Why? Why? And they're like, well, I know there's power in real estate. It's like, ooh, but maybe this isn't the power. Maybe this isn't it. Like I said, I had Kiyosaki on several times on the show, and he was explaining that because during that time it was the early 2000s, it was the beginning of it was the mortgage boom, it was the liar loans, the ninja loans, no income, no assets, no problem, that, just crazy times. He explained that it was incredibly important to get out of those bubble markets and into the fundamentals. And he showed me that just because California was high priced, overpriced in a bubble, nothing made sense, nothing penciled. There were places like Dallas, Texas, where you could still buy a home for $150,000 brand new, have it rent for $1,500 a month in an area with massive job growth, population growth, and infrastructure growth. Infrastructure growth being a huge one. If a city is investing billions, that's a clue. So I was like, wow, that makes a lot of sense to me. I think Rich and I can start buying the mortgage business ended up being really good for me. I think we can start, buying some of these little houses. So I went to Texas, ended up coming back with 5 because this is back when you could even get investment property with no money down. It was crazy. But came back with 5 properties that the rent covered the costs. I talked about it on the show. Again, our phones blew up. I wanna do that too. I wanna do that too. And that's when Real Wealth was born, my company that I have today 20 years later, of helping people in high-priced markets be able to still invest in real estate that makes sense, even if it's not in their own backyard.
Everyone listening to my voice, listening to mine and Kathy's voice, please lock into this because look at this progression of action. Look at this progression of curiosity, asking questions, learning, and then taking action. And I got to say, Kathy, there's most of us, we love learning, we love thinking about it, we love asking questions, but the action part is the toughest part. So, what was that mindset shift that you had to take to actually go fly out to Texas and find do you had to do some kind of research, find these 5 properties, understand, yes, this is an area that's booming, lots of infrastructure and investment. I think this will be a property that someone will need to rent. so that it makes sense. And that, because that's different from someone who just, that person you talked about who had this property that was negative, just because that was what either they were told to do or they thought was what they needed to do, but they didn't necessarily do the research behind it to make sure that this particular property was the right one to invest in. So tell me what shifted for you that made you able to go and take those steps to make that action profitable for you.
I think it's a few things. I was done with the struggle. I just never wanted to be in that position again. It was terrifying. The thought that, one, I could lose my husband and what? A single mom with two kids and a payment I couldn't make. And, I just did never want to be in that position again. And I think part of what a lot of times is generational. My mother had a sense for these things. I grew up in Menlo Park when homes were $50,000. And my mother would say, Doug, we should buy some of these little homes and rent them out. I remember this as being a little girl. And my dad, and this is back when women didn't have much power and really any financial say at all. This was, the 60s and 70s. And I just remember my dad saying, oh, Barbara, that's crazy. So part of it was like, I knew my mom was right because those homes were worth millions, and I would have been a very spoiled trust fund kid had my dad listened to my mom. So I think I wanted to do that. Like it was like this opportunity to do what she had wanted to do when I found out, oh, there's these houses. They make sense. Like this makes sense. It didn't make sense to buy $1 million house in San Ramon that rents for $1,000 a month or whatever. This doesn't work. But $120,000 house that rents for $1,000 a month, that makes sense.
Yeah, definitely. And so that's what I mean. So everyone listening, as you hear things on this podcast or any other podcast that make sense, that get you excited, instead of just filing it back into the recesses of your memory. If it's something that makes sense for you, dive in. Because am I right in saying, Kathy, you had to do research when you get out to Texas, and you had to find
Yes.
that, right?
Yes, and that was a process that the agent I called picked me up at the airport, and she took me to a neighborhood. She said, "Oh, you Californians, you love this neighborhood." And she took me to a neighborhood that was about $450,000 average home price, which by Bay Area standards was cheap, right? So of course any Californian would say, "Wow, that's a great deal for such a big, beautiful house." But I had done enough research and I knew the fundamentals. I'd learned it on my podcast, right? And I read the books of every author that I interviewed and dove in. I think to answer your question, I dove in hard. I was lucky to be able to interview people, but it wasn't just the interview. It was reading everything they wrote and just learning as much as I could. And one thing I knew and learned is that you to one of the safest ways to invest in rental property is to buy properties in the average home price that the average wage earner can afford. So in other words, if an average is the most people, right? It's this part of the population that represents the most people. So if you can offer a product that most people in the area can afford, then you're going to probably be okay, especially if you're in a metro area with 1 million people minimum. So these were just some of the foundations. So I knew that the average income in that area was, I don't know, $60,000 or something, and the average home price was 130. So I knew that 400,000 was a joke. So I just said, absolutely not. Clearly I know what you're after. It's a big fat commission. So I just thought, who am I going to talk to who I can trust? And I just ended up spending the entire week in Dallas meeting with property managers. One after the other, I probably met with 15 to just find out where's the rental demand? Where are your best tenants? Where are the areas where it's easiest for you to manage? Show me your process. I'd look at their office. If their office was a mess, I didn't trust them, I had people who couldn't find documents, there piles and piles of stuff on their desks. So it would just be a high and buy situation. But yes, I gathered enough information to know where are the jobs going, where are people needing to live near those jobs, and which part of the area do they want to live in, where, the schools and so forth. So we ended up picking this wonderful little town called Rockwall, Texas, that we knew Like I said, it was affordable, it was A-class schools, and there was new infrastructure growth with a new freeway coming in to connect that town to Dallas and make it a 20-minute drive instead of an hour. All of that just, again, made sense. Those homes are probably worth, $400,000 or $500,000 today, because we knew that it was in a growth area.
What I hear you saying is this is an area, this is a situation that if I were moving here and I knew I was going to need to commute to Dallas and this new freeway was coming in, this would be probably one of my first picks to live because it was far enough away that it still felt like a community and, I could be a part of the community, but yet I could still get to work at a decent time and a decent
Yeah.
front.
I knew my tenants would be happy.
Yeah.
I knew that I would be providing something they needed and wanted, because a lot of people, there's all kinds of attitudes today in America, and many of them conflicting. And one is that the landlord is the evil, greedy, person.
Yeah.
But I never saw it that way. I know there's people who don't really want to buy or own their own property, or maybe they're just in Dallas for a year or two. They don't want to buy. It doesn't make sense to buy. They want to rent. So I knew that I was providing a service, and I wanted that service to be wonderful. I wanted a nice product, and that has always served me.
We completely align in that respect because that's what that's what we're doing here. It's not just you're trying to make money, you're trying to finance things, you're trying to go into real estate or buying any other asset class and making money off of it. If they're just like you mentioned before, entrepreneurship is hard, business is hard. If there's no passion behind it, no purpose behind it, you're going to get burnt out quick. And what's going to sustain you? So it's the same thing here. It's no different. What is going to sustain you through all of the ups and downs and pitfalls and 15 interviews of potential property managers that, of course, one of them you might have hired in order to help you manage these properties. So what's going to sustain you through all of that? It's not just, for most of us, it's not just making money. There's a purpose behind it. There's a bigger purpose than that. And those are probably the people who are, more well off, that are thinking outside the box and coming up with ideas and actually taking action. Would you agree?
Yeah, I mean, that was probably the biggest thing I learned is I grew up in Atherton, California, which is the most expensive zip code really in California, but I still feel like we were pretty middle class because, like I said, 5 kids, and life in California is expensive, and it was kind of pre-internet. So I didn't know, and I didn't understand money or investing. And and I feel like there was always a bit of a struggle. My dad was an immigrant. My mom came from a very poor family. So we didn't have this wealth consciousness. And I was probably one of the people judging those who do have more. And I was probably one who might feel that jealousy that people feel today when they see that others have what they don't have. And it was until I started interviewing wealthy people and bridging that gap and trying to get into their mind and, like, how did you create this wealth, and what's different about you than me? I'm just as smart as you, but what's fundamentally different? Another thing I didn't mention is that I I did a um uh what do you call it? I don't want to say brainwashing, but when you listen to oh my gosh, what is it?
Is it like
Um
like hypnosis?
hypnosis, yeah.
Hypnosis, yeah.
I did a hypnosis wealth building so that I knew that there were hidden beliefs or just lack of acceptance of wealth within me that was rejecting it. And so I listened to hypnosis tapes on attracting wealth and seeing myself attracting wealth. And in the beginning, I would reject it. This part of me inside of me would reject it. I would kind of stop and go, what was that? And then I would journal on it. And it turns out it was something someone said, maybe it was a Christian thought that I heard in church. Or maybe it was something a friend said, that rich people are bad, or they're mean, or they're selfish, or whatever. And it took probably 30 days. They do say it takes like 30 days to change the way that you think, and the way you've been thinking for years. I was 30 years been thinking that way. So to change that, it takes time, to where I could accept the idea of me being wealthy, and that it wasn't selfish, that you can't give if you don't have, right? that was probably the first foremost. And then as I interviewed people, I did notice they think different. They are generous. They are creative. They know that if they lost everything, they could recreate it again. They're not afraid to take risks because they believe in themselves and their ability to make more money. And they see money as fluid. It's just an energy that's out there and it's going around. You can tap into it or not. You know, doesn't make you
Yes.
bad or good.
Yes, that's right. There's no judgment around it.
Yeah.
Exactly. Unless we give a judgment to it.
Yes.
Yeah, something you said perfect. So the people you talk to and anyone who has made a change for this generation that previous generations haven't, or someone previous to them, someone in their past, in their family history, someone there in order for them to be wealthy, like you said, I could have been a trust fund, spoiled trust fund kid. Someone made a choice and they chose to do something different from anyone else they knew and anyone else previous in their life. And that's all it takes. Is it going to be you? Are you going to be the one in your family history to do something different? Not that you had to take terrible risks like the person you talked about who had this property that was negative. You don't want to do that, but you do want to do something different and learn and grow and be curious and ask questions and then take action. You're going to make mistakes. I hate to break it to you. You're human like the rest of us, so it's going to happen. Just try and make those mistakes on a $150,000 property with $1,000 rent rather than $1 million property with $1,000 rent, right? I mean, it's going to be mistakes. Where is it going to be? I'd rather learn that in the lower price bracket so that then I can apply those lessons to the next one that's higher priced.
And you can avoid a whole lot of mistakes by doing your homework up front. Not too much, not to where it's analysis paralysis and you never take action. But, it took me probably a year of studying before I took action. And I mean hardcore studying, reading lots of books and talking to lots of people, going to real estate events, immersing myself around people who had what I wanted. It sounds like it was overnight, but it really wasn't.
It never is. There's no such thing as overnight. We humans don't work that way. So
Yeah.
we don't. Even in learning things like this, I'll tell you, I've been in marketing since 2003. And it used to be before the internet that the standard was it takes 7 touches, 7 times someone's exposed to what you're talking about before they are ready to buy whatever you have. It's now up to like 60 because there is so much information. So we're bombarded with so many things that now it's up to an average, and this is from HubSpot actually. It's up to an average of like 66 touches that they have to see something that you're talking about before they're
Oh
ready
my
and they've
goodness.
changed their
Wow.
mindset to be able to be ready and open to what you're having to say and potentially purchasing. And of course, that's an average. It could be 20, it depends on the availability and the readiness of the person, obviously. But yeah, you're going to have to be exposed to things many times before you're going to make a change. So this is not overnight. Don't think it's overnight at all.
And that's
Um,
okay. It's okay.
yeah, it's meant to be that way because we do need to adapt, and we are adaptive creatures, no matter how fast we think we're doing it. Wow. Okay, so you know, now this brings us to, I know there are many other things that happen in the middle of that, but now this brings us to what you're doing now and how you are helping other people learn this, access this. You have funds, you have processes that you've created, I'm sure, a book, a podcast. Again, you're contributing to those 66 touches. Fantastic. Because the more we find someone that we can relate to and connect with, and align with, then the more powerful that message is. So now take me to current and how you're structuring what you do now to help people do what you've done.
Well, Real Wealth now has 88,000 members worldwide. We have teams across the country that we refer people to depending on what they're looking for. So it's kind of like a Yelp for real estate, I guess you could say. Investors invest with these different teams and give us feedback. And if anything's off, we work with that team to help them be better and serve our clients better. So we have 15 teams. We do a lot of research on the markets that are up and coming, like Dallas was and still is. And then we just offer an enormous amount of free education because I so passionately believe that until we are financially educated, we're just going to keep making the same mistakes and stay in the same place. Uh, I have I have since gone to my team and said, maybe we should be charging for some of this education. I see other people do it, but they are so bought into our vision that they're absolutely not. We're known for giving free education. They even do free consulting. Again, I'm like, we should really be charging for that. But my original vision, they are so committed to, which is just so sweet. So we offer, free investment counseling webinars every single week to teach you about some of the latest tax cuts for real estate, to teach you how to asset protection, how to vet a property, how to vet a property manager, just all the things you need to know to be successful at that. So, and membership's free. Realwealth.com is our business. Um, then we found out that because I'm now in Southern California, but big following in Northern California, these are busy people, tech workers working ridiculous amount of hours. Same with ER doctors. I mean, they're so tired, they're so busy, they don't have time to do any of the things we're teaching. you know. Um, so we don't want them making mistakes. So we started probably 15 years ago syndicating before the Jobs Act. I was one of the first syndicators when the mortgage meltdown happened and banks were just failing left and right. There was no way to get money. It was very difficult to get money. And yet deals were everywhere, like insane. Uh, so on my podcast, somebody was listening, a developer, and contacted me and said, I was retired. This is my third time being retired, but I can buy entire developments for 10 cents on the dollar. Can you raise like $3 million because I can pick up 27 townhomes waterfront in Portland for $3 million when it was worth 20. And I was like, I don't know. And so I sent out an email and we raised the $3 million in about 5 minutes. I also had someone call and say, you just broke the law. So what do you mean? It's like you can't raise money that way. And this was again before the Jobs Act, so it had to be a private placement, and it had to be 506B, which means you have to have a existing relationship. So anyway, I quickly found a syndication attorney, and he drafted the right documents, filed it with the SEC so that I could do it legally, and those. The $3 million I raised was with people I knew because I was doing regular events. I didn't know them, so it was okay. But that was back in, I started in 2009, kind of learning. And then when the Jobs Act came, boy, that really accelerated things. So we learned how to help these very busy people be able to get into exciting deals like that and not have, they're just completely passive. Mhm.
Exactly. They are the investor. Someone else is doing the work and understanding actually hit boots on the ground, doing what needs to be done, and they can just invest. And that's exactly what the Jobs Act was created for. Even if you're not an accredited investor, it was specifically designed for everyday people. So that's fantastic. So the prevailing winds are saying charge for your training and charge for everything. I get it. I totally get that pull. I've been there. But really, the people who are drawn to you will appreciate what it is you're offering. And the people who are looking at your free education and resources will take that and act on it. And remember, you gave it to them. So, no matter what, you are going along in that journey and they will find their way back to you. I really, truly believe that. And I've seen it happen. So, kudos.
Oh, thank
That's
you.
fantastic.
It's exciting. Now we're at a point where we have people who trusted me 20 years ago, followed the plan, and are wealthy beyond their wildest expectations. So it is incredibly exciting to see that. And some people who completely bypassed the pain of 2009 and the Great Recession because they listened to me, because I helped them sell at the peak in the bubble in the Bay Area and Arizona, some of these areas where the numbers just didn't make sense anymore, and was able to help them sell at the peak, go buy into Dallas at the beginning of its boom, and just save what would have been a $1 million loss into a $5 billion portfolio. So it feels really good. That's actually why I won the Goldman Sachs Award for Most Intriguing Entrepreneur 2 years in a row. Very,
That's it.
very
And
cool.
congratulations. And I sense that that's because you have common sense.
That's so funny. It is common sense. It's common sense. And I would sometimes laugh. I ended up kind of getting on the circuit because of my background in broadcasting. I would get invited to be on different, ABC, CBS, Market Watch. I think in this case it was Fox Business News. Um, Robert Shiller of the Case-Shiller Index wanted to debate somebody, and they chose me. And I thought, oh my gosh, here's a Yale scholar, and I'm just a San Francisco State grad, a BA degree in, I don't know, broadcasting. How am I ever going to go up against this guy? And this was in 2012, and live TV, scary. And his argument was that it was a very dangerous time to be investing. And I'm like, 2012, like people are picking up stuff for almost nothing, and the cash flow is ridiculous. Like it just made no sense. So I got on there and said all those things. Like it is the greatest wealth transfer in history. People can buy at the bottom. It's all about the cash flow. I just went off on it, and interest rates were low. I mean, it was the perfect storm. And by the end, he agreed with me. The difference, again, being common sense versus too much scholarly work. Because if all you're doing is looking at data, which is he's a data collector, and you're looking backwards, you're seeing 4 years of loss, right? And all I'm looking at is forwards but these cash flow, and they're cheap, and the same house you would have paid 3 times, this price for, and the rents haven't gone down. So it was obvious. Ever since then, I've trusted my common sense, even when I'm scared and comparing myself to people who maybe have more information.
Listen to that. Everyone who hears our voice, please listen to that. Trust your instincts, especially when they're rooted in common sense. And you're even going up against someone who supposedly is better, smarter, whatever other you want to add to it than you. Because it doesn't mean we're always right. But when we look around and we say, well, wait a minute, this doesn't make sense. Does anybody else agree with me? And people we do trust go, yeah, that doesn't make sense. Then you kind of know you're headed somewhere that you might be okay. So, Kathy, this has been an incredible conversation. I got to invite you, or I'm sure you hopefully come back up to Northern California regularly from Southern California.
Yes.
The best part of California, sorry, but it is. But anyway, teasing. If you come back up to Northern California, I cannot wait to meet for a cup of coffee somewhere in the Bay Area and just have another amazing chat. Maybe our wonderful listeners will invite you to that chat as well. But in the meantime, please check out Kathy. You'll see all of her links and everything in the show notes, her incredible community and the incredible work she's doing, her books, everything. I invite you and encourage you to start being curious about what Kathy's doing and dive in head first because there's not going to be a bottom. You don't have to worry about it. It will lead you to amazing places. So, Kathy, thank you so much for sharing this time with me.
Thank you for having me.
If today's conversation sparked your ambition, subscribe now and join a movement committed to bridging the wealth gap. Every episode delivers insights that can transform your financial destiny.